In this joint venture chapter. Now we can discuss second question, that is P and Q entered into a joint venture. They contributed to rupees 20,000 and 16,000 respectively, and they decided to share profits and losses in the ratio of 3:4. The purchases are 32,000 and the sales amounted to rupees 40,000. The remaining stock is taken over by Q for rupees 2,000. Expenses paid are rupees 1,600. P drew from the venture, that is 8,000 rupees, passed necessary journal entries and prepared the necessary ledger accounts for the joint venture. Here it is clearly mentioned we should be write journal entries as well as ledger accounts for the joint venture. In this, P and Q enter into a joint venture. They contributed 20,000 and 16,000 respectively. And means P given 20,000 rupees to the joint venture and the Q contribution to the joint venture is 16,000, and decided they share profits and losses in the ratio of 3:4. Finally, they divided the profit up 3:4 ratio, that is 3/7 and 4/7. The purchases are 32,000. The purchases are 32,000 means here the goods purchased from joint bank, because of it does not clearly mention that which co-venturer has purchased. It's not purchased by P and Q. It is jointly purchased. There is a purchases are 32,000 and the sales amounted to rupees 40,000. Sales amounted to rupees 40,000. The remaining stock is taken over by Q. Whatever the stock is taken over by Q only, that is rupees 2,000. Expenses paid are 1,600. Remaining stock is taken over. Expenses paid are rupees 1,600. P drew from the joint venture, that is 8,000 rupees. P drew from the joint venture, that is 8,000 rupees. Means P draw from joint venture amount, that is 8,000 rupees. We should be prepared journal entries and ledger accounts in the joint venture. This method is called as when books maintained separately. As per the joint venture, whenever the books maintained separately, then we can for then only this is the books. This question, when separate set of books are maintained, means that organization has maintains as per the organization. If it is a books joint venture books, if it is maintained, that is in the books of joint venture, we should be right in the books of joint venture, that is journal entries. In this first one, they contributed 20,000 and 16,000 respectively, and P contributed 20,000 and Q contributed 20,000. That is joint bank account debit to P's account to Q's account, whatever contributed by them. You should be right them. That is 20,000, 16,000. 20,000 contributed by P and 16,000 contributed by Q. Total 36,000 contributed. Now next one, narration. Being P and Q contribution to joint venture. Next, second entry. They share the profit 3:4. The purchases are 32,000 and the sales amounted to rupees 40,000. Whatever the purchases and these are the sales is done through the transaction through bank on joint venture only. So whatever the amount, we should be taken from joint bank and we should be transferred to joint bank only. If it is a purchase, created the joint bank, and if it is a sales, debited the joint bank. That is is a purchase joint venture account debit to joint bank account. Whatever the expenditure we should be debited. Okay, so purchase is expenditure, you should be debited to joint venture. Okay, instead of writing purchases you can write joint venture. That is 32,000 rupees and 32,000 rupees. Okay, narration being goods purchased for joint venture. Okay, next third entry is there is a goods sales up to amounted to rupees 40,000. Okay, then joint venture, okay, that is the income now, so created the joint venture account and debited joint bank account. Joint bank account debit to joint venture account. Okay, we should be created the income, simple. So the amount is 40,000. The narration is next, the remaining stock is taken over by Q for rupees 2,000. Okay, the stock is taken over by Q. Then so Q is the receiver. Okay, should be debited the receivers. That is Q's account debit. Q's account debit to joint venture account. To joint venture account. Okay, the amount of the worth of the goods is 2,000 and 2,000. Narration is stock taken over by Q. Next, fifth entry is expenses paid are rupees 1,600. Okay, expenses paid are 1,600. That is 1,600 is from joint bank because of it's not does not clearly mentioned about okay, who has paid here. P draw from the joint venture. Okay, here this expenses paid by Q only. If you are considered as a Q, you can created the debited the joint venture and created the Q account. If it is joint bank, okay, created the joint bank. Okay, so here we are assumed that it is expenses paid by Q. Okay, expenses paid by Q, that is 1,600 rupees. That is joint venture account debit to Q's account. So this expenses paid, continuation of the one is expenses paid by Q only. So that is 1,600, 1,600. Narration is being expenses paid by Q. Okay, next is sixth entry. That is joint venture account debit to Q's account because of that is the expenses paid by Q. It is a continuation of the one. It is expenses paid. The Q taken stock 2,000 and the Q only expenses paid, that is up to 1,600 rupees. And the P draw from the venture rupees 8,000. P drew from the venture, that is 8,000 rupees. Okay, so personally he drawn. So that is the amount to withdraw from bank. Okay, that is joint bank. Okay, so the joint bank, that is cash is goes out, we should be credited, and who is the receiver? P is the receiver, hence you can debited the P. Okay, finally the entry is P's account debit to joint bank account. Okay, the narration is being amount withdrawn from joint bank. okay, from joint bank. Like this you can write narration. Okay, next, seventh entry is, we write after the preparation of joint venture account and after the preparation of joint bank account. Okay, whatever the balance and whatever the joint venture profit, we should be transferred to joint part, that is a P's account and Q's account. After the transferring, that is balances of P and Q, we should be transferred to joint bank account. Okay, that is only the procedure. Okay, so now we can left some space for preparation of remaining two entries, and after that you can prepare joint venture account and joint bank account and co-venturers, that is P's account and Q's account also. Now we can follow each and every journal entry, and after that we can prepare the ledgers. Okay, first one, joint bank account or debit to P's account and Q's account. Joint bank, there is in the debit side of the one. So in this question it's clearly mentioned that, okay, it's clearly mentioned that should be prepared, okay, should be prepared on journal entries. Okay, that is the reason I can go with the journal entries. Okay, next question, there is a directly question, ledgers. Okay, there we will discuss, okay, how to prepare the ledgers, okay, from question to ledgers, okay, without any journal entries. Okay, here we can go through as per journal entries and prepare the ledgers. Joint bank account, first entry is joint bank account debit to P's account and Q's account. Go to joint bank account, that is joint bank account debit side. Okay, joint bank account, there is in the debit side, no? So here P's account amount is contributed, no, 20,000, to Q's account contributed amount 16,000. Okay, that is joint bank in the debit side, and also enter the credit side of P and Q's account by joint bank account. Joint bank account amount is 20,000 and by joint bank account amount is 16,000. Q contributed 16,000. Okay, like this you can write. Next, joint venture account to debit to joint bank account. Okay, go to joint venture account, write debit side to joint bank account. Joint bank account, the amount is 32,000. And also go to joint bank account, and the credit side you can write by joint venture account. Venture account, that is the amount is 32,000. Okay, that is only the second entry completed. Next, third one, joint bank account to debit to joint venture accounts. Okay, so debit side there is a joint bank account, so go to joint bank account, write in the debit side to joint venture account. Joint venture account, this is the sale, no? Okay, so amount is 40,000. 40,000. Okay, like this you can, and okay, double entry, you should be follow the double entry. Okay, they enter the debit as well as credit also, and go to joint venture account, credit joint venture account, go to joint venture account. The credit side you can write by joint bank account, the amount is 40,000. The amount is 40,000. Okay, so it's not somewhat visible. Okay, yes, joint bank account, it's a 40,000. Okay. Next, third entry also completed. Next, fourth entry, Q's account to debit to joint venture account. Okay, go to Q's account. Okay, Q's account in the debit side to joint venture account. Joint venture account, so the amount is 2,000. Okay, and go to joint venture account, In the credit side you can write by Q's account 2000 rupees. Okay, 2000 rupees, like this you can enter. Next, joint venture account to debit to Q's account. Joint venture account to debit to Q's account. So go to joint venture account and write in the debit side of joint venture account to Q's account. That is 1600. 1600. Okay, and go to Q's account and write credit side 1600 by joint venture account $1,600. Okay, like this you can enter. Next entry, P's account to debit to joint bank account. P's account to debit to joint bank account. Go to P's account, in the debit side you can write to joint bank account. To joint bank account. The amount is 8,000. Okay, and also go to the joint bank account credit side 8,000 by P's account 8,000. This is withdraw the cash. Okay, now all the entries we are posted it, okay, in the ledgers. Now you can compute. First of all you can close the joint venture account. So find out is it profit or loss in the joint venture. Okay, okay, so credit side is a 42,000 and debit also it is 42,000. Okay, next the difference of the 42,000 minus 32, 10,000, 10,000 minus 1600, that is 8,400. 8,400 profit transfer to P's account. Okay, so how to, that is 8,400 na? 8,400 into the profit sharing ratio is 3:4, that is 3/7. Okay, 8,400 into 3/7, and to Q's account 8,400 into 4/7. Now the ratio amount is 3,600 and 4,800. This is only the profit. For this profit you can write one of the entry, joint venture account debit to P's account to Q's account. Okay, joint venture account to debit to P's account to Q's account. Okay, the amounts are total profit is 8,400. The amount are distributed 3,600 for P and 4,800 for Q. Okay, so the narration is being profit transfer to co-venture. Okay, that is joint venture profit transferred to P and Q as per their sharing ratio 3:4. Okay, same profit. Okay, so whatever the joint venture profit transferred to P's account and Q's account also. Okay, go to P's account and Q's account, in the credit side by joint venture account. For P, okay, P amount is 3,600, and go to Q's account by joint venture account that is 4,800. Okay, now you can close the P's account and Q's account also. That is 23,600, 23,600. Okay, the difference 23,600 minus 8,000, which is equal to 15,600. Whatever the balance, you can transfer to joint bank account. Joint bank account. This is balancing figure amount. Okay, balancing figure amount, that is 15,600. So 15,600 again debited P now. So now you can create the joint bank account by P's account, that is 15,600 he can withdraw from the joint bank. Okay, P can withdraw from the joint bank, it is 15,600. Okay, and now we can close the Q's account, that is 16,000 plus 1600 plus 4,800, total 22,400. Debit also 22,400 minus 2,000, which is equal to 20,400. So it is transferred to joint bank account. Joint bank account. Okay, it is also balancing figure. So this is also Q withdraw, that is up to 20,400 rupees. Okay, amount 20,400 rupees. Now this is the same amount you can create at the joint bank account. Okay, by Q's account 20,400. Okay, finally the create amount is, create of total amount the joint bank account is 76,000, and the debit also 76,000. Okay, finally if it is books are maintained separately, then joint bank account it should be equal, like it's a balance sheet. Okay, it's not a balance sheet, but both are should be equal. Okay, then only the question is the answer is correct, or otherwise still there is a mistake somewhat in this. Okay, like this, whatever the joint bank account, it should be equal. Okay, that is only the answer. Okay, in this type of questions we know the answer. Okay, we know the answer. If it is a correct one, is it correct or not, directly we can ask for the answer. Okay, and if you require any next one, so whatever the joint bank amount transferred to P and Q, we should be write one of the entry, that is P's account debit, Q's account debit to joint bank account. That is next 7th, 8th entry. P's account debit, Q's account debit to joint bank account. The amounts are 15,600 and 20,400. Total 36,000. Total 36,000. Narration is being balance of joint bank, balance of cash transfer to P and Q. Okay, or otherwise balance of joint bank account is transferred to P and Q. Okay, so that is only the entry. Okay, whatever the balance of P and Q's, okay, is withdrawn. Okay, like that you can write narration. Okay, this is only the final one. And if you require any one-to-one classes, okay, if you require any material, okay, PDF material for this chapter, please contact 74168622278. Okay, online classes also it is available. Okay, please be contact 74168622278. Thank you.